Building materials retailer Cashbuild reported a fall in half-year profit as consumers grapple with high interest rates, causing discretionary spending to remain under pressure, coupled with impairments. Operating profit, including the impairment of 137 million rand, decreased by 81%. Headline earnings per share down by 20% from the period prior. To talk to us a little bit more about the numbers, we are joined by CEO Werner de Jager. Werner, thank you so much for your time. You're looking at revenue that is, grown by 2%, but you're seeing a pressure coming in from the profit margin side of things, as well as headline earnings, which I reiterated there, down by 20%. Take me through the period that was for Cashbuild.
Good afternoon. Yes, it is. The market is extremely tough at the moment. It's very difficult to get your top line to grow. And I think where it all started is we've been aggressive in our pricing. So we've seen a bit of a drop in our gross margin, and with a cost base that's fairly fixed, and the pressures from paying people and paying landlords, which is our two biggest costs. We did see our operating profit go down. It's certainly not something that we're proud of, but it's certainly a sign of the times we're in.
What are you seeing when it comes to customer traffic within your stores, as well as average spending patterns here?
So we, for the first time in probably 3 years, have reported a growth in customer transactions, albeit very low single-digit numbers. What we've also seen, though, is that the average basket for the first quarter was flat on the prior year. We only saw for the second quarter of our financial year, which is the October to December time period, that we saw about a 4% increase in our average basket, and that's pretty much in line with the inflation that we've seen coming through in our business.
Do you find that consumers are holding out on the big ticket purchases, or are they holding out on purchases across the board?
No, for our business, we're seeing that the structural items, the cement, the bricks, the timber, those things are the ones that's not doing well. But the products, the decorative products, meaning floor tiles, paint and decorative ceilings and cornices, those are the things that's still doing well in our business. And we believe customers don't have the money to spend on big projects, so that bit of money that they have to spend, they spend on smaller projects in and around the home.
Have you had to shift your strategy in order to, I guess, adapt to the changing consumer behavior?
No, we did extend our paint range and decorative range slightly, but again, it's not something that we want to become a paint shop or anything like that. So we have made some changes, but for the long term, cement is still our biggest product, and we know these type of products will come back, and we still need to have them in our stores.
Take me through the momentum you've seen, if you had to go back between 2023 going into 2024. What kind of momentum are you seeing from the business side of things?
Unfortunately, it's still very slow. We reported the first 6 weeks of this calendar year is basically flat on the prior year. So unfortunately, we haven't seen the 2% continuing, but rather it going down to similar levels as the prior year.
What metric would we need to watch for in order for you to have confidence that things are starting to have a positive turn in the DIY or the home improvement sector?
The obvious one is employment. We need more people employed so that the consumer spending can have more spending power. You mentioned it in the intro, interest rates. A cut in interest rates will definitely help the consumers in general, which would bring more money into their pocket. So those are probably the two big ones we need to watch.
We've been talking about, easing interest rates, and some economists are expecting that ease to come into the second half of this year. If we're to factor that, what does that mean in terms of outlook going forward for Cashbuild, and then what's top of mind as a priority for you and the team?
So, yeah, for the next 6 months, like you say, there's not going to be too much in terms of a change for us. There's elections that's looming in May, which is also adding to uncertainty in the market. So for the rest of the financial year, we expect trading to be subdued still. Top of mind for us and the team is to roll out more stores. We know there's still opportunities, places where we not are, and that is top of mind at the moment for us. We've got an alternative model, a smaller model, Cashbuild, that we want to roll out more, and our initial target is by the end of June to have at least 10 of them approved. We've opened one so far, and so we're on track to achieve that number.
Werner, thank you so much for your time, and we do look forward to having you back on the show as we take stock of the next 6 months. But that is Werner de Jager, who is the CEO of Cashbuild. Just on those numbers, that share price trading down 3.1% at 138.93.